we begin with the markets as the S&P 500 closed at a record despite the ongoing government shutdown. Joining me now for more on this is Hardika Singh, economic strategist at Fundstrat. Hardika, welcome to the New York Stock Exchange.
This is so exciting. Thank you again.
All right, so you say that usually government shutdowns don't matter for markets, but in this case, they might. Can you elaborate on that?
Yeah, so typically shutdowns, they make for great headlines, but they're not really a cause of big concern for markets. Our data team put together this analysis that showed about 60% of the time, the S&P 500 is up 1 month after a shutdown is over. So typically, not a big cause for concern. But I do think that the setup is different this time around. And that's because, like you said, on Friday, we won't get our highly awaited BLS jobs report. The jobs report that we did get from ADP on Wednesday didn't look all that great. Now we have two major US jobs reports showing that the labor market is slowing down. And with the shutdown happening right now, I'm concerned that government job losses will accelerate even more. This year, we've already lost 8,000 jobs. This year, we've only added 8,000 jobs. That's on pace for the lowest level since 2020, when the economy actually lost jobs in that sector. So I think this just makes it very, very complicated for the Fed because they're not going to have a larger number of data sets to pick and choose from to see what's going on in the economy. And the greater confidence the Fed has when it's making its decision, the greater faith investors have that, yes, this is the right decision for the economy, this is what's best. And I think that without the BLS report coming this Friday, it's going to be a little bit more complicated.
All right, and how do you think the absence of that BLS report might affect the Fed's October meeting, especially with these weak ADP numbers?
Yeah, so now it's shifting more to the argument that, yes, we need rate cuts in October. I think most market participants right now are betting on that outcome. And I think, yes, the economy could use it. However, it's so important to stress that rate cuts come for the right reasons. Historical data has shown that stocks react better when rate cuts don't come in a slowing economy, because at that point, it might just be too late, right? So we want to make sure that the economy is still growing, but not slowing down so much that rate cuts are more like a rescue. We need it to be more like an insurance. And that's the big thing I'm thinking about right now with BLS and ADP pointing to an October rate cut.
And do you think these private sector reports like the ADP can ever fully replace government data?
No. And I remember in August when BLS Commissioner Erica McIntyre was very publicly fired by the president, everybody jumped on the bandwagon that, yes, we actually think private data could be a very good alternative to public data. But as the huge decline in ADP jobs report Wednesday showed, it's that even those private data need public data. It's benchmarked to the BLS data set. That's why there's a huge decline there. So as much as people are saying the private data could definitely replace it, it can't. We still need good public data. And that's why I think that BLS report is just very important. And that's why shutdown is different this time around.
And with all of this focus on jobs, with the job losses in sectors like construction and manufacturing, what do you think is driving that?
An immigration crackdown. It's really exposed the weakness within the labor market. And this BLS data set that we get every month, we can't exactly figure out how much impact undocumented immigrants are having on it. However, we can see that industries that heavily employ undocumented workers, like construction, wholesale trade, manufacturing, professional services, these industries have posted job losses for 3 months straight. And it's very difficult because, these are the industries that help our economy grow. So I think that it's very difficult for the economy to post solid economic growth when we don't have these areas adding jobs. And it's not like you can just easily plug in an American worker and replace these workers, right? Because these aren't jobs you train a singular day for. You need to train, in some cases, for years for these highly, highly technical jobs. And I think that's what makes it really difficult. The immigration crackdown has just really shown us that this resilient labor market that we were seeing for the past few years may not have been so resilient just by itself after all.
So the S&P 500 hit another record yesterday, closing above 6,700 for the first time. Given the government shutdown, do you think this resilience is a sign of investor confidence? What do you attribute it to?
I was a little shocked that because we started the day down and then suddenly we started recovering. I think some of it could have been tied to the news that came out of the Supreme Court that Lisa Cook, one of the Fed governors, can stay on her role until, I think, January, until they have oral arguments for the case. And I think that really showed that, okay, there's still transparency in the market, that, she's fighting back. It's a dramatic showdown. But that is so much better than the alternative, that is silence. So I think that just goes to show that the Fed independence still remains a thing. There's a fight for it, but it's still very much a thing.
All right, Hardika Singh, thank you so much for joining us at the New York Stock Exchange.
Thank you so much.